Back with Indian Open right here on BloombergQuint. Muthoot Capital saw its bottom line drop by more than 20% despite a rise in net interest income. So was it an outcome of the sharp drop in auto sales which have continued, especially two-wheelers, Muthoot Capital's mainstay, or was it the part of it also due to the higher impairment in the quarter gone by? Let's pose that question to Madhu Alexiouse, the Chief Operating Officer of Muthoot Capital Services, joins us right now on the show. Madhu, good having you. Thanks so much for taking the time out. Could you sum up the quarter for us? Was it a quarter which was a continuation of some of the pain that the space has been seeing, but the pain showing signs of ebbing out? Is that how you would sum up, or is there something more to it?
Good morning, Neeraj. Thanks for the opportunity to come back again to your channel. Last time when we had met, and I was mentioning that there had been pains in two-wheeler industry in retail financing business. But what we have witnessed is during Q1 and Q2, it was bottoming out, and Q3 is something where we believe that things were looking better. October month was really good, one of the best months of this particular financial year. The vehicles sold were more than 17 lakhs, and then November was also better. December there was a sharp decline for whatever reasons, and I've been telling due to model change and things like that, and the confusion of BS4, BS6, the volumes were under pressure. Q4 also would look slightly, because the BS4 vehicle need to be cleared off and BS6 vehicles are getting launched. So I'm saying that between Q1, Q2, Q3, we saw things bottoming out, and from profitability perspective, in fact, we have sequentially, QOQ, we have done better compared to Q2. In terms of our book growth, in terms of our revenue, we have done better compared to Q1 and Q2. So the headline for us and how we look at it is that things are now stable in terms of our NPAs, in terms of our collections. Also, we have seen slightly better Q3. Pain is not out, pain is still there, but I think that things would, and in fact, things are looking better compared to what we have seen in last 2 to 3 quarters.
Could you qualify better? I mean, what segments or what is it that is leading you to believe this? And if indeed that's the case, are you already seeing signs of that in the first 27 days of the month of January?
During first 10 or 15 days of January, it is basically a season where people don't buy Shraddh and things like that. And after Pongal and after some festivals that are there at regional level, Sankranti and all those things, things are looking better as far as January is concerned. Q4 we are expecting that with BS4 inventory being there, things would be smoother in the sense that the vehicle would be available, customer would be willing to buy these vehicles because there's a price benefit as far as BS4 vehicles are concerned. At the same time, BS6 is getting launched. The indication that we have from the OEMs is that around Feb and March, BS6 vehicle would get launched fully for all the OEMs. So we are expecting that the transition that is there should be smoother, but we are seeing that in January it is actually better than November and December that we have seen. So in terms of, if you ask me how the growth trajectory has to be in Q4, it would be, we are expecting about 40 lakh vehicles that would get sold. It should have been 45 or 48. Against that, we are seeing that about 40 lakh two-wheelers may get sold in Q4, including the Euro 6 vehicles that's going to get launched around Feb and March.
Okay. Now, talk to us also about what happened to asset quality in the quarter gone by, Madhu. Your quarter 2 gross NPAs, that is the net NPAs on a YOY and a QOQ basis, I think had inched up a bit. What's your sense about, I mean, how did quarter 3 fare, and what's your sense about asset quality in quarter 4, even if the rest of the next quarters are difficult to predict right now?
In fact, Q1 generally there is a spike in as far as NPAs are concerned, especially in retail finance industry. April and May month is generally not that great. And whatever spike happens in Q1 is recovered during the Q2. But this Q2, and we had been we've been telling that there were a lot of issues related to natural calamities, floods in Kerala, floods in Karnataka, Maharashtra. So Q2, the expectation during the September that we will be able to reverse the NPAs did not happen. But in Q3, we have seen that it has really improved. The net accretion to NPA for us was around 10 crores in Q3 value-wise, and net NPA would have grown by about 3 or 4 crores. So that's a good sign that the reversal, what we were expecting in Q2, has started happening in Q3. And while we get into Q4, we are very confident we should be able to come back to lower levels, somewhere, what we would have done in June, just lower than that. Q4, definitely we are expecting that the collections would improve. There's a lot of initiatives that we have taken on collections perspective. We have stayed invested in all our touch points. So we have not withdrawn from any of the touch points. So actively teams are there, collection, sales, everything is there. So we are expecting that things would look much better. Q3, our NPS stabilized, net accretion was lower. Q4, it would further go down. So we are very confident as far as quality of asset is concerned.
Okay, so I'm guessing the sum and substance of this is that asset quality could likely, in all probability, look better as the quarters go by. At least Q4 will look better.
Yes, and moreover, the denominator had been constant for us, and we have said that we'll go very conservative till we see the signs of recovery in terms of overall sales of two-wheelers. So denominator also would have been constant. So that's another reason why the percentage would look slightly higher. But value-wise, net accretion has started reducing.
Madhu, before I get to the year ahead, just a quick question on how do you expect, what's the kind of guidance, if at all it's possible to give for FY20? How do you expect to end the year with? On key parameters, on key numbers?
I beg your pardon. Can you just?
I was asking, how do you expect FY20 as a year, the March ending, to be like on key parameters, NII, asset quality, bottom line, any guidance that you can give us?
In terms of, I can give you a broad parameter in the sense that it would be too early to give you, year-end figures. In terms of overall sales that I said, Q4, we are expecting about 40 lakh vehicles that would get sold. Our market share had been about 1.6 to 1.7%. We have continued that. In fact, we have improved our market share. Our finance share is about 4.5%. So we'll continue that. We expect that we'll continue to do that number, which is about 70 to 75,000 units. So out of on an average, 25,000 units is something which we are expecting we'll do. Close to we are expecting about 500 plus crore disbursement as far as two-wheeler loans are concerned. So any parameter would be linked to that. In fact, with the sale that we are seeing about 40 lakhs with market share of 1.7%, we are expecting that we should be able to close this year with not much of degrowth versus the industry. Industry degrowth is about 18%. We may not have that much of degrowth. That's the immediate figure that I can share right now.
I'm guessing from whatever little we've spoken thus far, Madhu, and the last couple of questions, is that at the end of Q2, because of the uncertainty in the environment, you had on stated parameters said that you're adopting a cautious approach. You seem to be now shrugging that off. Is it a factor of the industry having bottomed out, or is it a factor of you believing that the environment at large is changing in the rural area?
So I'll divide it in two parts. One is from industry perspective, and second from how the rural India is behaving. From the industry perspective, there were two cautious approach that we had taken. One, that few players were vacating the market. Do we want to gain the market share there? And our thought was that the customer profile that they fund and the customer profile that we are looking, that is entirely different. So we may not aggressively pursue those markets. At the same time, our internal risk assessment on certain areas where we think that market is good, we have aggressively grown there. 15 to 20% is the growth where we wanted to grow. We have grown. So from industry perspective, we have seen players vacating the market. At the same time, the confusion of BS4, BS6, we wanted to wait for that till Q3. As of now, we feel that now the confusion is slightly getting over because all the OEMs have come out very clearly telling that by Feb they should be able to dispose of their BS4 vehicle and they would be able to launch the BS6. So we are, the initial expectation that whether there would be a pain as far as Q4 is concerned, we are seeing that the transition would be smoother. So we are very confident in funding those vehicles, whether it is BS4, whether BS6, we are very confident. We have our strategies to do that business. From rural perspective, yes, we had seen slight stress as far as rural cash flows are concerned. One of the reasons, impacting our collections, our collection cost, which we are seeing that it is reviving back. Generally, around Q3, Q4, rural economy is slightly better because agriculture comes to market, the finished products comes to the market, they are able to sell their crops and revive their cash flows. So traditionally, Q4, around Q3 end and Q4, the rural cash flows are much better, and it flows into Q1 and Q2 also. So two-wheeler industry generally, Q4, Q1, Q2, they do really well, or rather H1 does very well for two-wheeler industry. So we are seeing that rural economy would look better for us as we go forward, and so that confidence that how the industry is going to behave, whether it would be in a confused state or not, and second, how the rural economy is going to behave, both are positive for us, and that's why we are saying that we'll grow our books very aggressively. We may shed our conservative stand as of now, but as I said, we have internal way of looking at which are the good markets, grow there, green markets, grow there aggressively, and we'll follow that risk policy, risk mechanism.
Madhu, one final question. What about the borrowing costs? How are they shaping up? What about credit in the system? How easy is it for you to get the monies that you may want, even if there is demand?
As far as supply is concerned, supply is not an issue. Cost of funds is something which we are, it would be great if it can come down. But the thing is that we are not seeing not more than 10 or 5 to 10 bips coming down. That I have maintained during our last discussion as well. As far as till this financial year end is concerned, 5 to 10 bips is something which we are seeing it would go down. Encouraging thing is from a securitization perspective, we did a recent securitization of about 145 crores. We were rated AAA by CRISIL. That portfolio was rated AAA. So those are encouraging signs that people are liking our portfolio. They want to lend more to us given our portfolio. Those are very positive signs. So as far as supply is concerned, we are not really worried. Cost of funds, yes, the aspiration is to reduce as much as possible. As we close the year, not more than 5 to 10 bips.
Okay, thanks for that candor, Madhu, and thanks for speaking to us today, and all the best for Q4 as well as the times ahead.
Thank you, Neeraj. Thank you very much.
That's Madhu Alexiouse of Muthoot Capital. Hopeful of things. They're saying that things have started to look upwards, and they're hopeful of this trajectory continuing Q4 onwards as well. For now, the stock up about 2%. Management has sounded a lot more confident than what I would have thought otherwise. But talk to the other corporation or the company in focus, and that's Nesco. The demand for commercial property is on the rise, and that's great news for Nesco, which owns one of the largest land parcels in Mumbai. The company also runs perhaps the largest exhibition ground in the city. Joining us now to talk about the growth opportunities is the company's chairman, Mr. Sumant Patel. Mr. Patel, good morning, and thank you so much for speaking to us at BloombergQuint. In your years of experience of running this business and looking at leasing as well as outright real estate, how does the current environment look like, both for your company and for the industry?
We are focused on IT Park.
Yes.
We have Nesco IT Park, and we completed first building of 8 lakh square feet, IT building 3, and now we have completed our second building, about 17 lakh square feet, IT 4. Both of them have very good response. We have got some of the top international companies who are our licensees, KPMG, Pricewaterhouse, HSBC, Morgan Stanley. So as far as our experience is concerned, there is a good demand for IT park space. And the third building which we are building is about 40 lakh square feet for our IT building 2. So I think our overall, there has been a good demand for IT space. Lot of it from the international companies who are coming to India.
Okay. So what percentage of the tower that you put out has already been occupied, sir? And I'm presuming these are anchor tenants. Have they come in at a slightly lower rate, which, well, a lot of companies use to get in the anchor tenants? What's the current lease rental that you are charging on this new building?
You know, the IT building 3, which is about 8 lakh square feet, is fully occupied. And IT building 4, which we completed recently, is 80% occupied. Now I think we expect before March 2020 we have got number of international companies evaluating, and we expect that we'll complete the entire licensing before March 2020.
Okay. Is this happening at competitive rates, sir? I mean, or have you had to, because of the general slowdown, reduce rates a bit?
No, I think we have been fairly stable. We have not reduced our rates. They have been reasonably good rates. Our buildings are all A-grade buildings, you know. Designed, our latest building was designed by well-known American architects, HOK, and we have taken care to see that all aspects are A-grade, top class. So we have had very good companies, and I don't think we have had much reduction to do in the license fees, you know.
Okay. For the existing tenants, sir, is there any kind of renegotiation that might be coming up because the leases might be getting expiring? And what is your sense on how rates could behave over the course of the next 12 to 24 months? Do you see an uptick in lease rates?
What we are seeing is that more and more international companies are coming into India, in Bombay, and I feel that the demand for the IT space will continue. We are seeing companies from all over, from Japan, from Europe, from America, coming to India and wanting space, you know. So I feel that in the next 1 or 2 years, the demand should continue to be what it is now, continue to grow, I think.
So would you revise the rates upwards, sir? Not for the Tower 4, but the earlier towers that might have been, that are occupied, would you revise the rates upwards?
We have agreements with our licensees, which provide for escalation every 3 years, so that rates are getting revised as per the agreement we have with them.
Okay. So in light of that, and I would want to come to the future planning in just a bit, but in light of these rates escalation that you have in mind, that you've agreed into, plus the kind of demand that you're getting for Tower 4, as you just yourself said, what does this do to the earnings trajectory of Nesco, sir? How do you expect, say, FY20 to be like, if you can talk about that, and what's the kind of growth people can expect for FY21?
Well, in 2019-20, we expect about 25% growth, and we also expect good profitability. We expect about 300 plus profit in the year 2019-20. So the profitability for this year should be good. And I think it will continue also for the next year, because then our IT building 4 will be fully occupied by then.
Yes, indeed. So you are saying, sir, correct me if I'm wrong, but you believe that FY20, which is the year ending March 2020, will see a profit number of close to 300 crores. Am I getting you correct, sir?
Yes, that is correct. It's about our profit before tax will be about 325 crores. Yes.
Okay. And taxation rates are about what,
That's
25% or? I mean, would that be the expected tax rate, sir?
Recently the government had reduced the tax rates. So I think tax liability will be about 60 crores on the profit expected for 2019-20.
Got it, sir. Okay. Now, I heard you mention that 2021, because of the Tower 4 fully leased out, will also add. I presume there is, as you mentioned, that there's a new Tower 2 at a planning stage as well. Can you tell us about what happens post Tower 4 having been done? What's the kind of addition that you expect to capacity? What's about the exhibition center? How is that shaping up? Some color out there, Mr. Patel?
Yes, we are now working on 2 projects. One is the IT building 2. For about, the built up area is about 40 lakh square feet. And the licensable area will be about 25 lakh square feet. At the same time, we are working on expansion of Bombay Exhibition Center. We want to build some new halls, and I think we will be adding about 10 lakh square feet space in Bombay Exhibition Center. So on both projects, we have, I think our team is working on it. For our IT building 2, we have the designs are under finalization, and by the architect, Singapore architect ADAS that we appointed, they are working on the final designs. So I think in the coming year or so, we'll be undertaking both the projects, expansion of Bombay Exhibition Center and the IT building 2.
And you won't need to raise any capital for the same, I presume, sir?
Our policy has been to finance from our own resources. We have not raised any debt. Our company is debt free, and we are expecting to finance both these projects from our own liquid reserves and further accruals.
Okay, well, keep up the good work, Mr. Patel. Thank you so much for speaking to us at BloombergQuint, and all the best for all of these plans.
Thank you.
Well, that's the view from Sumant Patel of Nesco. Pretty confident about some of the numbers, much higher than the brokerage estimates as well. And Nesco is a stock that's done actually reasonably well. In the last 12 months, about 64%. That's no mean feat for a company at the mid-cap end of the market. So good going there, and maybe with reason. But time now to wrap up on this leg of Indian Open, with the markets pointing towards a 0.5% downtick. All the action taken up on the FNO show. It's a good buy from all of us who put Indian Open together.